Welcome to the WA Podcast, where the goal is to motivate, inspire, and share success principles. I'm your host, George Masri. Hey everyone, thanks for joining. Today I interviewed Martin and Lyne, who are real estate investors specializing in self-storage and assisted living facilities in the United States. Early on in their real estate journey, they became the top producer of off-market multifamily opportunities in New Brunswick, focusing on wholesaling, BRRRRs. On this episode, we discuss acquiring an investor visa to the US and how they can help others do the same, why they moved to Las Vegas from New Brunswick, why they moved away from buy and holds and went into self-storage. We also broke down the assisted living investment model and the importance of thinking big. I know you guys are going to enjoy it. Thank you for all your support throughout the years. We've been going on for about 6 years now doing this podcast, and your support is truly appreciated. Thank you for all the reviews that you're leaving. Once again, our goal is to reach 100 reviews here. So if you can, on the Apple Podcast platform on your iPhone or on your Mac, make sure to leave us a 5-star review and contribute towards our mission to get to 100. So there you go. Enjoy the episode. All right. I'm here with Martin and Lyne. Thank you for joining me all the way from Las Vegas.
Thank you for having us. We're super excited to do this.
Absolutely.
So I like to start off by asking about your childhood. So tell me about where you grew up and a couple things you remember.
Nice. We're both immigrants. We have kind of the same story. I was born in Algeria, which is North Africa, right next to Morocco. And my childhood was awesome. I had a lot of fun with my family. I was surrounded by cousins and brothers and sisters. I have 3 sisters. We're 4 girls in total. So I was never really alone. Had a lot of fun growing up. Kind of had my own clique of friends within my own house, which was awesome. And I have really good memories of my childhood. What about you?
I grew up in China for the first 14 years of my life. I grew up in Beijing, and I was the only child. I was born in the area where, one-child policy was the predominant, policy that was in place in China. And it was awesome because I essentially got all the attention from my parents. The way that I was brought up too, even though China was a very competitive environment in terms of education, but my parents really focused on, developing the interest that I had outside of school as well, which I really appreciate to this day. So even right now, whenever we have an interest, we really prioritize on that. And whenever we have a passion, we really just seek out to pursue it. And I feel like the reason why I feel so relentless about, the pursuit of, whatever it is that we're working on, it's largely due to, my parents just really enabled me and just told me, hey, you can really do anything. And we're here to support it.
Okay. Very cool.
Yeah. So that played a huge part in my life. And then as Lyne said, we actually, we're both immigrants. So we both moved to North America at a young age. We obviously didn't know each other back then, but
no.
I spent some years in Minnesota. And then I went up to Montreal to attend McGill University.
Okay.
Yeah.
For me, I moved with my parents when I was around 12 to Canada and spent my high school, CEGEP and college there. So we recently decided to move to the US. So I guess our immigration life hasn't ended yet. We're still doing it again. That's so basically the main story.
Where did you guys meet?
We met in Montreal. It's funny because I love telling people that we met in his backyard, which is the case.
Oh, okay.
So we, it was kind of at the end of the first wave of COVID where things started reopening. And he had bought his first duplex, his first investment property in Montreal, and he was house hacking. So he rented every single room in the duplex. I think it was 6 or 7 rooms in total. And one of the roommates there decided to throw in like a move-in party. And I had nothing else to do. Martin had nothing else to do. So I ended up going to that party because he was a college friend and Martin was there. And we spent the night talking, and that's kind of how we met.
And it's actually funny because Lyne actually grew up with her dad flipping houses. She grew up in construction sites.
I did.
And that summer I was renovating the basement. So I was just talking to, people at the party, and I was like, hey, why is this girl, so interested about, properties, real estate, investments? Let me just give her a tour around the basement to see what kind of ideas she can give me. And that's really how we created that special bond, probably like 10 minutes in the conversation.
Yeah.
I just took her to my unfinished basement and she gave me, she essentially told me, hey, like I will put a room here, put a room there. I was like, who is this person that knows so much about real estate? But yeah, that's how we started, talking.
Okay. Let's talk about your journey just very quickly. New Brunswick wholesaling. How does that happen?
Okay, so I got my first interest of real estate through my father. He did development in Algeria. He was renting out houses, flipping. He did all sorts of things, and then did the same thing when we moved to Canada. But basically, when we met, I was moving to Moncton for school. I was pursuing a degree in criminology in University of Moncton. And then when I was looking for apartments there, Martin was there to help me out. And we realized that the rental prices are very similar to what you find in Montreal. Mm-hmm. And we thought, well, that's weird because Montreal is a big city. It has a lot for it going on. There's a lot of migration coming into Montreal. But Moncton is a very small city. There's 150,000 people living there. So we didn't understand why the rental prices were so high. But when doing more research, we realized that the purchase price was a lot lower, just a fraction of the price that we would find in Montreal. I think your duplex, you bought it for like $570.
Yeah.
And the duplexes there were like $185 for a side-by-side duplex, 3-bedroom on each side. Beautiful place. So we decided, okay, we need to buy something rather than rent something because we can literally live for free buying a duplex, living in one side and renting out the other and make profit on top of it. And then the story goes a little further with that.
Yeah, I didn't let her rent anything. When I was looking with her, I was like, Lynn, this doesn't make any sense. I have to house hack. And that's how you met me. You saw I had to rent out room per room in Montreal. So in New Brunswick, like just buy a property, you live in it, and then we just continue building a portfolio that way. Properties are, like very affordable. So we can easily build a portfolio here. So that's what we decided to do. We started educating ourselves from YouTube University, but also a bunch of books, Bigger Pockets, all of the podcasts that we can get our hands on. We just consume so much content, and we figure out a strategy where we look for off-market distressed property owners, and we try to create a win-win situation with that particular seller. So we really started to do that at scale, and we built this pipeline of off-market deals that were constantly coming in. We essentially close on the deals that make the most sense for us. We'll close on it with joint venture partners, so using OPM. But for the deals that didn't quite make sense for us or that didn't fit our buy box, but still fantastic deals, we created essentially a wholesaling company. So assigning these opportunities to other investors who are also looking in the New Brunswick market.
Okay. Yeah, that's exactly what we did. And it's funny because we took it a little like even further. At the time, there was what we call the Atlantic bubble. So they closed off the Atlantic Canada because there wasn't as many cases there, and nobody was allowed to go in unless you had a really good reason or you owned real estate there. So we bought a fourplex and decided, okay, if we want to do this, we got to go all in. We got to be there physically because all of the other investors are looking to buy New Brunswick are not there physically. So we have that advantage by going there. So we bought a fourplex, moved into that fourplex, and started being the boots on the ground and helping other investors by being directly there. So that was our advantage.
Mm-hmm. When was this, by the way? What year? I know you mentioned COVID, so this would have been like 2020, 2021, roughly?
Around 2021, yeah.
March 2021.
That's exactly when we moved, March 1st, 2021.
Okay. And do you still have that duplex in Montreal, just out of curiosity?
We do.
Yeah.
Oh, okay. Cool.
It's funny because the first property we bought in New Brunswick was the fourplex that I just told you about to allow us to cross the border. And we recently, actually a couple of weeks ago, sold that fourplex and doubled the money that we put down on it. So it's kind of a full circle situation here.
Yeah, the duplex, it's probably going to take me a little more... doing a little more like mind work to be able to get rid of it. That was my first investment property. As much as we're trying to draw our emotions away from it, that was a property that, my mom and we lived in. That was the first property that we bought together. So my mom, loved the location and she's using a lot of her her emotions into it. So we can't just easily dispose of it. But everything in New Brunswick, we really treat it as a portfolio, right? So if it's not generating cash flow, we get rid of it and we move it on to something better.
Mm-hmm. Mm-hmm. Well, it sounds like it's impossible not to have cash flow based on what you guys are saying with the rental rates and the prices.
It's changing for sure. Just like every other province in Canada, there's a lot more regulations that are starting to pop up when it comes to rentals. It's getting a lot stricter on rent increases, all of that. And also the prices have gone up by a lot. We used to buy these side-by-side duplexes for $175. That was the first one we ever purchased. Now they're going for $360 sometimes. So it's really hard to buy anymore.
For multifamily too, if you were looking in the market back in 2018, 2017, you could pick up, at 50,000 per door, but now they're easily trading at 120 to 150,000 per door.
Yeah.
And the rents, they're definitely not comparable to Ontario. It's decent if you can manage to get properties less than 100K per door. But honestly, anything over that, it's kind of stopped making sense for us. We felt like, for someone from Quebec or Ontario, if they're looking for cash flow, Moncton right now with the current prices, it's very comparable to a secondary or a tertiary market in Ontario.
Sure.
Yeah.
Yeah, I know a few years ago, well, let's say maybe a year and a half, 2 years ago, when I would interview people on the podcast, a lot of people were talking about exploring New Brunswick as an option. It seemed like the trendy thing to do. And then once they put in the rent caps or rent control, then all of a sudden no one's talking about New Brunswick anymore. It was kind of funny how things changed.
That's very true. Actually, they removed it recently. It was, I think, 3.6% capped, but now they just did it for a year. Now it's gone. They were thinking that potentially it would come back at some point, but right now there is no more rent cap. But it's just the trend in Canada. I feel like every province is kind of slowly getting stricter and stricter on regulations.
Sure. So is that the reason you guys made your move to the US? Do you want to talk about that a little bit?
No, not particularly. We like to think, we charge a very fair rent, and we always, justify the rent increases. We always do the value add renovation. We go above and beyond for our tenants. And we also hired, the best possible property managers in place. When we started, we actually hired, I think 7 or 8. We tested out every single property manager there was, just to see if it's a good fit, if they're able to provide the level of service that we want them to. But the reason why we we exited from residential are really twofold. So first of all, we realized the more we scale, the more units that we had. I think at one point we had around 35, 36 stores under our portfolio. Realized that, the more we scaled, the more headaches that we're creating for ourselves. Sure, we have property managers in place, but you still do have to manage them. And as long as you have human tenants living in the units, as great as they might be, there are things that you just cannot control, right? There's so much electrical problems that might go into it. If a ceiling starts to leak, you have to fix the roof, you have to fix the drywall, and the tenant will be complaining. You have to deal with, giving them compensation. Hopefully they won't leave. So all of that eats into the cash flow, and it's really hard for us to scale.
There's too many moving pieces. The way a house is built, there's too many moving pieces. You have plumbing, electrical, heating, the drywall, the wood behind it. There's so many moving pieces. So when anything breaks and anything needs to be fixed, you end up having to fix 4 or 5 layers. So the drywall, sometimes, the beam is rotten under and you have to change it. And there's so many things that goes into it. And then moving with, having to deal with the tenant side. So sometimes, like he said, we had great tenants, but they're just regular wear and tear that happens with having someone living in it. They're using the space, so there's just regular wear and tear that's expected, and then you have to constantly go back and fix it. And we're like, okay, we definitely like the idea of scaling, of having that cash flow coming in, but what kind of asset types can we focus on that eliminates that part where, the tenant part and the moving pieces, the fixes part, but still allows us to get monthly cash flow and get a good passive income coming in.
That's right. And a huge second point, the reason why it's twofold, the second point is also, as soon as the interest rates started to climb up, because we were very much in tune with the sellers and also the buyers, right? Lynn is also a licensed real estate agent. And also we were wholesalers. So we had a very good hold and a good grasp of the sentiment our buyers had, both on the off-market side and also on-market side. Realized that, as soon as the interest rate shot up, it really scared off like the majority of the buyers. And a lot of them are very, very experienced, right? They were essentially looking to New Brunswick to expand their portfolio. So we felt like just residential real estate overall, it's extremely volatile and it's very dependent to market cycles. We're looking for an asset type that's a lot more recession resistant. I don't believe in, any asset type that's fully recession proof. We're looking for something that's a little more resistant compared to residential. And that's, I guess it's a great segue into what we would love to talk more about. So that's how we came across, self-storage. And for Lynn, it's assisted living that really resonated with her.
All right. Yeah. So tell us a bit about that.
So like we told you, having to deal with the tenants and then having all of these like issues come up and eating into our cash flow made it that the more we scaled, the more issues we had, the more it was eating into our cash flow, the less money we were making, to be honest. So the way I see it is, if I have to go through all of that, if I have to deal with, a residential house, if I have to deal with tenants, it might as well be profitable enough, or at least be more meaningful than just, having multifamily buildings. And assisted living came in place when we were looking for a business to purchase for our E2 visa, but we wanted something that's still real estate based, that still brings us the good cash flow. And I wanted something that was also more meaningful. So assisted living just kind of checked all of the boxes. It's still real estate based. You're basically renting out rooms within a house. You're offering a service. You're helping your community. You're helping the elderly. So it's focused on senior citizens. And it's also great cash flow. So the average right now, the average price for a private room in the US is $4,500 per month. And if you have, let's say, a 10 or 16, which is kind of what we're targeting, which is still on the residential side, 10 to 16 bedroom homes, you're looking at 45,000 all the way up to like 55,000 per month of gross cash flow. So that makes a lot more sense to go with something like that than to go with a single family that you can rent for, like, let's say $4,000 for the entire house. So it just made more sense for us to go to the assisted living side. Now, other than just operating the assisted living facility, the other option is to, own these facilities and rent it to operators. And in that situation, you were talking about a triple net lease. So they pay for all of your expenses. They pay for your property tax, for electricity, gas, everything that they use. They simply pay you the rent, and you only have to pay the mortgage. So your return there is a lot greater too. There's also pretty much a growing demand right now for assisted living. We're talking about one of the biggest portion of the population is the baby boomers, and they're all getting towards the time when they're retiring. They're all getting to 55 and 65 and older, and they're at some point when their health is declining going to need to go either into nursing homes or assisted living. So I feel like that entire sector is pretty much growing. And they're saying by like 2040, we need to build a million more assisted living units in the United States. And we only have like 7 to 8 years left to do that. I feel like that's a pretty big challenge to take on. So I see the demand increasing. There's not enough supply. In a lot of places, they're absolutely booked. There's waiting lists now. So there's definitely a lot of room for us to build assisted living or retirement communities, but also, acquire existing ones and operate them and run them better. So that's kind of what attracted us to assisted living.
That's actually what I was just going to ask you. So the places that you're involved in, are you buying existing properties that are set up for assisted living, or are you purchasing a big house and then converting it to assisted living?
So our primary focus was to get our E2 visa. So for us, quickly, E2 visa, it's basically you have to invest a considerable amount of money into a US active business. And if you're planning on moving to the US to run that business, they will give you an E2 visa, which is 5 years, multiple entries. You get a social security number. Your spouse and kids get the right to come and move with you there. They also get a social security number. They can get a work visa. They can study as well. So to us, that was the easiest way for us to immigrate here. So we're planning to invest around 100 to 120,000 into an operations company. So we're not buying the real estate. We're only buying the operations company of an assisted living, so we can qualify for our E2 visa, but we can also enjoy the cash flow coming up from it. So for now, we're solely focused on acquisition, and we're trying to help other Canadians and other people who are looking to immigrate into the US through the investment route by offering more of like a turnkey solution. When they can come in, we can present some deals to them, and then they can invest into an operations company. We have a very experienced operator that has a couple homes already that's going to do the operations in the day-to-day, and they can have more of a passive investment, enjoy the cash flow, and get their E2 visa the same way. So right now we're focused on the acquisition, but our long-term goal is to work on the development side. So as I told you, there's a million more units that needs to be built in the next 7 years. So there's a lot of room for us to go in and build retirement communities. And the idea is to have independent living, assisted living, and memory care within the same community so people can age in place. They don't have to move and find a new place. And if their needs increase, we can respond to that, and we can give them the care that they need. So that's kind of like the short-term and long-term plan for assisted living.
Yeah, and I think it's also important to mention that we're not lawyers, right? So definitely check with the immigration lawyer regarding the actual E2 specifics.
Absolutely.
Just don't take any legal advice.
Yeah, little disclaimer: we're not lawyers,
right.
Accountants. Don't take what we say as advice. We're just talking about a personal experience. But yeah, if we were to help another Canadian invest into an assisted living to get their E2, we'll obviously have to have them work with our lawyers or refer them to an immigration lawyer that will help them with all the paperwork and applications. Absolutely.
Okay. Why did you guys pick Vegas to go to, of all places, just out of curiosity?
So we're not necessarily investing in Vegas per se. We like Vegas for multiple reasons. The weather's a lot better than what we have in Canada. The winters are not as rough. We also have family that lives here, which was great to be close to family. But it's also a very central spot in the US. It's easy to fly in and out. A lot of people end up stopping by Vegas at anytime. I feel like everybody has at least gone to Vegas at least once or is planning to at some point. But there's a lot of trade show. There's a lot of events. It's a great town to network. There's so many meetups happening. Every week, I think we go to 2 or 3 meetups at least here in Vegas. So it was a great place for us to network. It just was very central.
Yeah. And the fact that, it's great. It's not, besides the trade shows, right? Besides all the conferences that are always held here in Vegas, we have essentially no state corporate tax on a corporate level or a personal level. So what ended up happening was ended up being a place where a lot of these high income earners from Seattle, from San Francisco, from LA, and even all the way from New York are moving down to Vegas because the properties here are considerably a lot cheaper, a lot more affordable. Your standard of living is also a lot higher. The houses here, like the place that we're living right now, it was built in 2021. So a lot of these newer homes are getting built as Vegas is getting bigger and bigger. So that's how we ended up meeting all these amazing, multifamily syndicators, some fund managers. A lot of these entrepreneurs end up bringing their knowledge and their network into Vegas. And for example, like tonight, we're going to this event that's focused on commercial real estate. It's called a commercial collaborator. And yeah, there's fund managers. There's a lot of people that are operating at a really high level there. They do deals all across the country, right?
Yeah.
That's one thing. A couple years ago, I had a few American investors come on that I remember like 1 or 2 of them would say to me, you guys are doing pretty well up there, but you just don't think big enough. As like Canadians don't think big enough. So
That's very true.
Yeah, I can see that kind of how that would play out. It seems like really big deals are done in the States. So
I also feel like we're a little behind on the trends when we're in Canada, right? We're kind of like looking at what the US is doing and kind of catching up. But I feel like in the US, there's so many, it's also a lot easier. It's a lot easier for entrepreneurs to move forward. There's a lot less regulations, a lot less strict. It's a lot easier as an entrepreneur to move forward. And as Martin said, there's a lot of states that don't charge you any income taxes on the corporate or personal level. So you do have a lot more capital to reinvest. There's a 1031 exchange that allows you to roll back your profit from one property to another without paying any taxes. So you can scale a lot faster. I think that has pushed a lot of Americans to be able to grow and develop a lot faster. So their masterminds here are a lot bigger, a lot more developed. There's education on all sorts of things. Where in Canada, for example, we're very limited in the masterminds and education groups that we can join compared to the US. There's like hundreds of them everywhere. So I really feel like in the US, we're a lot more developed. But at the same time, the population is 10 times bigger. There's 10 times more space. There's a lot more opportunities here. So it's a lot, it's the environment and the space is just a lot better to grow in it and to kind of like learn from it than what we have in Canada, which is another reason why we decided that US might make more sense for us.
Sure. So let's talk a bit about self-storage. That's something you guys are involved in as well. Tell us about that side of things.
Absolutely. So it's super interesting because right now, Lynn is focused on assisted living. I'm focused on self-storage, which is like literally the opposite of this on the spectrum, right? We kind of see it as something being extremely passive in terms of active management versus something where you literally need registered nurses, 24/7 staff to take care of the residents. So I really think of it as more of a diversified strategy. How we came across, the idea of self-storage was we, went down to one of the masterminds in the US. This was over a year ago. And we were learning about, we're actually, it was a driving trip. We drove all the way down to Florida from New Brunswick. And we were attending a few masterminds. One of them was about Canadians investing in the US. The timing here, it's really interesting of the story. So week 1, we went to that mastermind. We're like, wow, the US is great. It opened our eyes to everything that we just told you about. And then the next weekend, we ended up at the self-storage mastermind. We met all these multifamily apartment owners. They're obviously Americans. The event was in Orlando. They're in their 50s and 60s. they've been financially free and they've been, creating a massive amount of wealth over the years. They've been doing this for like the past 20, 30 years, right? And one of them was also a franchise owner as well. I think he owned about 12 Subway franchises. But all of them were there for the same reason. They were all saying, we're obviously doing really well, but we need to actually retire. Even though it's financially free, but we still have to deal with a lot of headaches with the tenants, with all the issues that comes with running a business. We want something that's like truly passive, that we can pass on to our family as a legacy. Because right now, if they just give the portfolio to their family, they don't know how to run it. It's still a lot of active management that's required. And guess what? That event was a self-storage event. So that's when, it really lit up the light bulb, I guess, for us. We were like, why don't we just try to get into that space right off the bat? If that's where American multifamily owners for the past like 20, 30 years are actively trying to get into. So that's what, really started our rabbit hole into the whole self-storage strategy. So over the past year, I was leveraging the network that we have. I was leveraging all the masterminds, all the events that we could get our hands on. We essentially developed our strategy for now. It's to develop ground up self-storage development. So these are Class A self-storage facilities that fit the buy box for REITs like CubeSmart, for public storage, for life storage. So these are, usually climate controlled with security gates, and they might be even among the multi-level. They're usually in primary markets or secondary markets, sitting at around 80,000 to over 100,000 rentable square feet. So massive facilities that these CubeSmart is actively trying to acquire. So we essentially, our strategy is to develop and look for sites that are suitable for a Class A development like this, build them, have the REIT manage it, and at year 3 or year 5, we can look to either refinance as an exit strategy. So similar to a BRRRR strategy, right? To refinance the proceeds back out and use that towards another investment, or we have the option to sell it to one of the REITs that's looking to penetrate the market. Now, if you look at the historical performances of all these REITs in the last couple of years, and also during the last recession as well, you can see they are one of the only asset types in commercial real estate that actually didn't go into the negatives in the last recession. And we're talking about 2008, 2009. And that's largely due to self-storage demand is very much driven by changes in life. So like we're talking divorces, we're talking about people losing their homes, we're talking about having to downsize or upsides. That's actually when people need self-storage the most. But that's on the residential side. But on the commercial side, you have law offices, you have clinics, you have CPA firms that need to store their clients' files for multiple years at a time. So there's a lot of data that back that, both from a residential and a commercial standpoint, whether it's a recession, whether, the economy is booming, or whether it's, the economy is at a standstill, there's always going to be a consistent demand in self-storage. So because of that, REITs realize, how recession resistant this is. They're looking to penetrate the market even more. And what's really interesting about the US is the fact that in the US, self-storage has been around for I think since the 50s. It's mostly driven by mom and pop operators. They pretty much control the entire industry. But REITs, they only capture about anywhere from 10 to 20% of the entire market share. So as well as they're doing, they're trying to capture more of the market, right? So that's why they're aggressively buying, they're aggressively building, and they're trying to capture as much of the pie as possible. So that's what we see being a huge opportunity. So why don't we just build facilities that these REITs want to call their own? Therefore, we're going to have, state-of-the-art facility in undersaturated areas that we can sell to REITs.
Yeah. And the great part about building these A-class facilities is that they're big enough, and we have enough room and enough like meat on the bone in this situation to hire the top team members. So we have feasibility study done by third-party consulting companies. They cost like $20,000 to get one. We have CubeSmart that is going to manage our facility themselves. So we're getting a REIT to manage our facility, making sure that it's properly managed, that it has the best software as possible, dynamic pricing, all of that. We get top builders. We're looking for builders that are building self-storage all over the country that are going to be building these A-class facilities. We're leveraging a lot of other people's expertises, and we have enough money to be able to give equity to people because the deal is big enough and there's enough upside. The great part with it is that the construction cost compared to multifamily is a lot smaller. It's just sheet metals and concrete. So it cost us a fraction of the price to build it, but then our valuation is based on our NOI, just like multifamily. So the difference between how much it costs us to build versus how much it's going to be evaluated once it's leased, it's pretty substantial. So we have enough meat on the bone to be able to get our investors a really good return, to pay for all the different moving pieces that are going to be an equity partner in this deal. So it just makes a lot more sense, and it makes it also a lot more secure of an investment because we have these top team members that are in the industry that have all this experience that costs a lot more for any mom and pop operation, but we can afford because we have this big deal that we're working on.
Mm-hmm. So I know you guys said that you moved to Vegas, but where would these self-storage units be located?
Great question, George. For example, our first deal, it's in Bellevue, Florida. That's where it's going to be. And usually, self-storage, when we're talking about self-storage market, it's very different compared to the Canadian real estate market for multifamily. In the US, we're essentially looking for population centers with enough density and that fits, the buy box that we want. So we're looking for a medium household income of at least 50,000. We want the population density in the 5-mile radius to be around 50,000 people. And we also, have specific requirements for the rates. It has to be on a highly visible street. So because the US is so much greater of a population, there's so many markets within the US that makes a lot of sense for a self-storage development. Essentially, how I usually tell people is think of a grocery store that you usually go to. You only care about, how convenient or how close it is to your house. You don't really care, if they charge, $2 more for eggs. Like you're not going to go out of your way to go to another convenience store or another grocery store to buy your groceries. You're just going to go to the closest one to you. So it's exactly the same thing for self-storage. The nature of this business, it's a necessity-based business, and it's very much driven by the convenience. It's very much driven by location. So that's why we're looking all across the country for sites that are suitable, that fit all of the criteria. So for example, right now, we're looking at this deal in Belleville, Florida. There's a deal in Fort Wayne, Indiana. There's also a deal in Syracuse, New York. And these are some of the markets where we see really, really positive population growth. We also see that the rates are on a really healthy incline over the years. And we also see that these are some of the markets in the 5-mile radius with very low saturation of current self-storage supply.
So there's multiple criteria we look into, which one makes the land that we need to purchase to build these self-storage facilities very rare and very hard to come by. So we were partnered with a group out of New Jersey, and they basically have people on staff full time just analyzing land deals. They're looking at lands for sale and getting all of these, checking up all of these boxes. And it takes a pretty long time to get there. And even once we do get there, then we have to get the feasibility study to come and basically confirm all of our all of the research that we've done. They come and they do a market analysis, they do a market study, they check to see if what the competition looks like, what the rates are like, and to get to the point where we're like, okay, this is a suitable land we can build on. It honestly takes close to a year for the entire due diligence to happen. That's good because we'll make sure that the deal is super solid before we move forward. But it's also a pretty long time and a lot of money that you have to spend up front before you can confirm that you can build something on it.
Yeah.
So at what point are you guys at now with your self-storage? Have you found anything? Are you still kind of in the due diligence phase?
Yeah. So for the Bellevue, Florida deal that I briefly mentioned, that one is actually, we already got the entitlements. We already have the renderings, the city permits. We just need to go pick it up and pay for it. But it's pretty much shovel ready. So that deal specifically, our partners have been working on it since 2021. So it literally took an entire 2 years to have everything ready, right? The feasibility plus the permits, all of that, it's currently in place. So right now we're at the stage where we just need to raise the down payment. And we already are in conversations with local credit unions. They're super stoked about the project because they know, right? They know the last recession, self-storage was really the only asset type that still weathered the recession really well. So they feel very secure. They feel very excited about funding the project. And all they needed was really the feasibility study, because they rely on a third-party consultant to kind of took an overall view of how this project is gonna plan out. And with the current supply in the market, with the current occupancy rates of the competition, and also the population growth, they deemed that, okay, this is a really solid project and that you should have no problem leasing this up. So all of this was, verified. So we feel pretty good about, taking this on as our first project, because a lot of the development projects, like most of the risks really come from, the delays that might come from working with the city. But all of that has been mitigated because we're essentially picking up this shovel-ready site.
Yeah. And even though this is our first project, like we told you, we're leveraging other people's experience. So we're getting CubeSmart to come in and to manage it, to make sure it's professionally managed. We're also giving out equity to this group that we're partnering with. We're giving them around 15% equity to just kind of hold our hand throughout the entire process, help us with any questions that we might have, help us with the money raising part, but with the deal, the construction side, we're leveraging their network. So even though this is our first deal, the actual key members that we're working on have been doing this for 20 years, 25 years. So they know what they're doing. They're very experienced. We're kind of just putting all the pieces together, but we're working with top operators and top team members to make sure that our deal goes well.
Well, I'm glad to hear you guys are pursuing this and you're doing everything you can to create the life that you want. Do you feel like there is anything that we didn't touch on that's important for you to share?
Absolutely. Yeah. I think a lot of the people who are in this space in self-storage, right, they are doing it on a deal per deal basis. But I think the fact that, we get to leverage, especially when it comes to ground up development, we get to leverage, this group out in New Jersey. But we also leverage it, through the industry partnerships that we have created over the past year. So we have access to quite a few sites, right, that are suitable for a Class A development. So in order to scale that, in order to really penetrate it at a bigger level, we're actually looking to launch an investment fund. So we're looking to, raise money in both Canada and the US to fund these projects. And that's how we see being a very efficient way of scaling up. So essentially we set up the structure one time and we can, set a goal, let's say like $25 million or $50 million as the goal of the fund. So that means we can do this project either 5 or 10 times, right? Exactly the same structure, exactly the same kind of returns. We can do that over and over again. So that, that's what we've been researching for the past, I would say a month and a half. That really opened up our mindset to think about these projects as a fund manager perspective. So, people always say commercial real estate is a team sport. We're used to kind of doing everything, but, ever since that we started structuring these deals like a fund, like as fund managers, we realized that, hey, we no longer need to just do the deals ourselves, right? We can easily leverage other top operators as well, as long as we can screen their projects, from an LP's perspective, and we understand, the overall returns and the overall strategy. Is in line and aligns with what we have going on for our investors, it will be a really solid deal for our investors to take advantage of. So that's what we're currently building. I think in a few years from now on, we're likely not just going to work on our own deals. We're going to be able to, have a specific criteria for our fund, and we can, essentially find the top operators in the industry and essentially come in as a private equity position to fund their projects and do the capital raising for these amazing projects.
It basically pushes us to think for our investors. We're no longer looking for deals that we want to do. We're really looking for, okay, what's the kind of deals, or what do we put our investors' money to make sure they get the highest return possible? And that really helped us evaluate deals in a different kind of light. We're really looking at, okay, what's the most profitable for our investors? How are they going to make their money? Are they getting their money back out quickly? And kind of like going through all of that. So that's a very new, different perspective, but we're super excited to go that route.
And that, I think the way that we've been doing the residential deals as well, right? Like in the past in New Brunswick, we used to, do BRRRRs on the 4-plex or the 6-plex. How we used to structure it is always we make sure the investor's money is paid back first from the BRRRR. And then we always try to get them, everything that we've done so far, it's a full BRRRR back in New Brunswick. And then we talk about, the split between the profits, between the cash flow. So I think just where we're coming from, the way that we treat our investors, it's going to set us apart in the investment fund world. Because a lot of it's about, the carried interest, what kind of pref you should give to investors. And I think all of that has really prepared us to be solid fund managers, looking out for our investors' interest and making sure, the minimum returns are met and paying out that pref to our investors. It's always been super in line with how we've been conducting business too. So we're super stoked to be able to do this on a higher level, right? So essentially, instead of doing a BRRRR off a fourplex in Moncton, we're doing this, $13 million project that's going to be valued at around $22 million, and that just per project, right? We're planning to do that, over and over again through our fund. So we're just super stoked about that. So I guess what I'm trying to say is, if you're, looking to scale up your business either in Canada or the US, if you already have a really good model and you have a really good track record, consider, going the fund route as well. I definitely think it's a no-brainer. At a certain point, there's only so many JV agreements you can write up. But if you're doing this from a portfolio standpoint, I'm working with multiple investors, obviously, accredited investors. It's going to put you on a different level.
Well, I appreciate that you guys are thinking big and continuing to work on your mindset to get to the next level. Do you just want to tell the listeners how they can reach you and get in touch?
Yeah, we're a little bit everywhere. So Facebook, Instagram, LinkedIn, and it's just really our name. So Lynn Sayre and Martin, your Instagram, it's Martin May.
Yeah, that's right.
So you guys can find us very easily. If you want to shoot us an email, lynmartin@meilypropertysolutions.ca. I'm pretty sure you'll have all of that written out for them. But yeah, we're super happy to connect with anybody, whether it's on assisted living, self-storage, or just funds in general. And yeah, looking forward to it.
Thanks, guys. I appreciate your time and you sharing your experience, and looking forward to staying in touch.
Awesome. Thank you so much for having us. Appreciate it.
Thank you, George.
Thanks for listening to this episode. Your support is truly appreciated. And if you can share this with a friend or family member that might benefit from the information, remember, our goal is to motivate and inspire others to take action and to build wealth and to become well off. Enjoy the rest of your day.